So this is gonna be day one, I guess, of me trying to do some type of boot camp, share my knowledge on trading. So this is just gonna go over the basics, I guess, of Tradingview, really, because most people don't know how to use it when they first start, and it's pretty confusing. So go over that. We'll go over candlesticks and what else? Yeah, that'll probably be it. Maybe we'll go over trends. Yeah, I guess we could do that. Alright, so let's get into it. So what I trade is NASDAQ futures, and I trade that primarily on days that I see as probable. Now what does this mean? If we go to Forex Factory, we can see the news for each week. As we see this week, we had no news Monday, bank holiday Tuesday, no news Wednesday, Thursday, Friday due to the government shutdown. But next week we have some orange folder news on Monday, FOMC on Wednesday, news Thursday and Friday. So what do these news events mean, and how can you see them? If you go to Forex Factory, you put your settings like this to only show USD, because that's what we trade in. And we uncheck yellow folders. Yellow folder doesn't really affect price action. Orange folder is semi-important, and red folder definitely does affect price. So the days I trade are normally Mondays with red folder news, so I most likely won't be trading Monday. Tuesday I'll trade, although we have no news. Wednesday AM on FOMC meeting minutes days, or it's normally not that great, so I probably won't trade that. Thursday I'll be trading, and Friday I'll be trading. If there was no news Friday, I wouldn't be trading that either. So that's just a general basis for news. That's how I select my probable days for the week. Now, what are we looking at? So this is Tradingview. When you create an account, your charts will be red, green. Candles will be red and green. Your background will be white. You won't have any of this. Yeah, so the way to operate this is you can left click, drag around the charts. You can scroll out to get a larger view, larger time frame, just longer times. You can use this to expand the candles, drag it down to make them shrink, up to make them larger, and then down here where you have dates normally, if we go to like the 1 hour, we can scrunch this up to make it to see further back in time, and drag it to the left to see more present price. So now, what are these candles and what are we actually looking at? So each of these is a candlestick, obviously, and depending on the time frame, depends on how much in time that candle represents. For instance, if we're on the 1 hour time frame, which we are right now, this candle represents 1 hour in time. Who would have thought? Now what can we tell from just one candle? We can tell where the price opened at the start of that hour. We can tell where it closed. We can tell the highest point that price in that hour reached, and we can tell the lowest point that it reached. Now, each candle has this information, and depending on the time frame, you can see what that candle did during that time. Now let's go over that, because it's actually a pretty important concept. So if we're going to be on, let's say, the 15-minute, and we just go here, so we can see that this was 9:30 open, the open of the stock market for New York, for the futures market. We can see that my white candles are bullish candles. If you're on a default trading view, yours are going to be green, and your bearish candles are going to be black. Mine are black, yours will be red. So now what does this candle signify? So we see that price opened here. It most likely took out and came this low as we see by this wick. And throughout time, it went all the way up to this top wick, as we see right here, and then it closed a little lower. And that's basically all there is to a candlestick. You have your open, high, low, and close. Now for a bullish candle, the open is going to be at the bottom, the close is going to be at the top, the high is going to be at the top, and the low is going to be at the bottom. For a bearish candle, price is going to open at the very top, it's going to close at the bottom, its highest point is going to be the high, obviously, and the lowest point is going to be this low of the wick. Now, that might seem simple in itself, but I think that is actually a pretty hard concept to understand, unless you're like, you just need to get reps in spotting what these candles do and make sure you're confident in knowing what a candlestick represents. So yeah, pretty basic, but also one of the most fundamental things you need to know when you're starting to trade. So now we can go into, I guess, time frames. So let's go to the daily time frame. You can see this by the D represented up here. We can also type 1D on our keyboard to go 1 day, and we can change it between any interval. So if we just do 15, that'll be the 15 minute, 5 will be the 5 minute, 1 minute, 2 minute, 3 minute, 4 minute, you know, all of those. If you want to do the hourly, you can either do 1H or you can just type 60, that'll be equivalent. If you want to see the weekly, you can type 1W, get the weekly. Yeah, that's mainly how you can switch between time frames super simply. And then you can go to these ones, and wherever there's a star, it will appear up here. So if I remove that 1 minute, I see it's gone from up here, but if I add it back, you know, it's right there. So you can use this for, I like to do this for the time frames I use mostly, so it's just easy access, but it's really a personal preference. But that's just navigating time frames, and we know, I guess I'll go over more what the time frames actually represent. So as we can see, this one candle represents 4 hours of price action. And what I mean by price action is just what these candles are doing, essentially. That's how I would describe price action. It's just like the movement of candles and how it's reacting. So we go back to our 4 hour example, we can see this candle, let's see this one for instance. This candle opened all the way down here. It went this low. It went hundreds of points lower. It came up and still closed bullish and even reached a higher price than where it closed. Now, there are many reasons that price did this. This is a 6 to 10 a.m. candle, so a lot of stuff happens. A lot of price movement occurs between then. And for reasons that you guys don't know yet, this is very important, and we can see why it reacted the way it did after going that low. So 4 hours of price is just the representation of 4 1 hour candles. Like, it's pretty straightforward, but you have to like understand how each of these time frames play a part for later lessons and lectures. 15 minute can be represented as just 1 hour can be represented as 4 15 minutes candles, and the lower you go, the more I guess movement in price there is. But I mean, a lot of what I've learned is that trading these lower time frames is much harder, and oftentimes you just get messed up in trying to trade all this. So I like sticking to the 1 hour, 15 minute, and 5 minute. 1 minute I sometimes use, but it's not that great. Like, you need confirmation from your higher time frames to tell you exactly what's going to happen. And that's what I realized through countless hours of trading. Yeah, I mean, this is a pretty straightforward video, just going over the basics of Tradingview. In candlesticks. So to recap, each candle has an open, it has a low, it has a close, and it has a high. Now, if we want to see a bearish candle, for me at least, I can draw that as well. Let's draw it in black. So we have our open up here, our high up here, same as the bullish candle. We have our close down here, then we'll have the low. And then I can even type this out just to make it make sense. And by bullish, I mean up closing candle, like high, price closed higher than where it opened. Bearish is when it closed lower than where it opened. I'll just type that out. Bullish candle. We have our high. We have our open. We have our close. And we have our low. Now for this bearish candle, we have our high, we have our open. Okay, I messed this up already, geez. Let me fix that. We have our close, and we have our low. Right, these are flipped. So yeah, for a bullish candle, price closes higher than where it opened. For a bearish candle, price closes lower than from where it opened. You should be able to spot this on every candle you see. It's very basic, but once again, you just have to be familiar and get that ingrained in your mind. But that's just the general concept of this video, just getting acclimated to seeing what candles are and the properties of them. So yeah.